and this has the potential to drive Tesla stock to $450. Hello, and I've just increased my price estimate for Tesla shares. This was the first line of a new video that Tom Nash posted on his channel. Tom Nash discussed a few aspects of the EV company before revealing his price objective for Tesla shares. He remarked that these estimates are modest and put a price tag of $408 on the bear scenario. As a point of comparison, the current median price is $253. Tom, who is more bullish, thinks it will reach $1,400 in 5 years, while he gave it a $914. Despite what you may have heard, Tesla's most recent earnings were outstanding. Therefore, I'm increasing my price target from $1,200 to $1,400. The profits, he went on to say, were fantastic. In spite of a decline in margins, both income and sales have increased. Everything throughout the company is booming. Don't fall for their tricks. Tom's projection of a $1,400 price for Tesla shares is too far apart from ARK's projection. ARK's revised open-source Tesla model predicts a share price of $2,000 in 2027. The bull case sees a share price around $2,500, while the bear case sees a price around $1,400 per share. According to ARK's projections, there is a 25% chance that Tesla's share price will be less than $1,300 by 2027. Under a more optimistic scenario, the open-source model predicts that Tesla's share price might reach $2,500 by 2027. 67% of estimated enterprise value and 64% of predicted EBITDA in 2027 come from the potential robotaxi business line at Tesla. In 2027, electric vehicles generate 47% of revenue across the ARK simulation set, albeit at much lower margins than robotaxi revenue. Tesla is already years ahead of the competition, and that's before they ever deploy their fleet of robotaxis. One example is that Tesla has been working on its fully autonomous driving software since 2016. ARK Invest Director of Investment Analysis and Institutional Strategies Tasha Keenan noted that Tesla has an unrivaled advantage in software and data compared to competitors. In contrast, Cathie Wood's ARK Investment Management sold 28,659 shares of Tesla stock at the day's closing price of $293.34 for nearly $8.41 million last month. Tesla is the largest holding, 11.26% weight in the ARK Innovation ETF as of July 19th, per the company's daily transaction statement. Tesla ranks number 5 with a weight of 6.58% in the ARK Next Generation Internet ETF. ARK Autonomous Technology and Robotics EDF ARK has a 15.03% weight in Tesla, making it the fund's top holding. ARK CEO Cathie Wood is a well-known Tesla bull and a major proponent of the company. Despite the fact that the average analyst rating of Tesla stock is based on future expectations, the stock price fluctuates significantly. There is greater variation in Tesla stock price predictions than for almost any other firm in the S&P 500. This is mostly due to the boom or bust outlook many people have regarding the corporation, which divides short-term traders from long-term ones. Bullish analysts and investors are ideologically convinced that the movement towards electric vehicles will continue with Tesla in the forefront. Their case is strengthened by Tesla's record deliveries in the second quarter of 2023 and the likelihood of record sales in China as a result of the company's price decreases. Reuters quotes Wedbush Securities analyst Dan Ives as calling Tesla's price cuts a smart poker move that is yielding significant returns in the field, particularly in the Chinese market. Bulls on Tesla also anticipate the business to dominate in the solar panel and battery storage markets. However, pessimistic analysts and investors worry that the company may fall short of its potential and become little more than just another production company, rather than an industry game changer. The corporation is overpriced and subsidized too much, making it vulnerable to competition, according to bears. You may have heard that BYD, a Chinese electric vehicle EV manufacturer, will soon begin delivering its Denza model, which is a direct competitor to Tesla's Model I. BYD is ready to show off its revitalized brand, and the PR blitz for Denza is indicative of their confidence in the product and their determination to heap pressure on the incumbents. According to CNBC and BYD, Tesla has more than a few formidable rivals, one of which is Lai, founder of the China-based advising business Sino Auto Insights. What does this mean for the future of Tesla's stock price? The odds of a year from now that Tesla stock will be worth $335 drop to $24.33. Or Commerce, the answer is probably somewhere in the middle, depending on whether or not investors believe the benefits of the catalyst exceed the dangers. The fact that Goldman Sachs analyst Mark Delaney downgraded Tesla in late June made him the third Wall Street analyst to do so in less than a week did not help matters. With a higher price estimate of $248, Delaney reduced Tesla from a buy rating to a neutral rating. Delaney's action is indicative of a trend in the reductions. It's difficult to imagine Tesla stock doing even better as we head into the final weeks of the year. After the stock's big gains so far this year, Delaney believes it more accurately represents his optimistic long-term outlook on the company's growth prospects and competitive standing. Adam Jonas of Morgan Stanley simply said, "I was not expecting the market to surge 111% so far this year." Jonas's position can be seen as reasonable. Following Elon Musk's purchase of a social media firm and the company's subsequent loss of market share to competitors in 2023, Tesla's stock price dropped by roughly 70%. Bulls such as Wedbush Securities Managing Director Dan Ives, who are once again banging the drum, are a welcome sight. He went so far as to say that Tesla's expanding revenue streams, including the supercharger network, which now includes collaborations with key competitors like Ford, General Motors, GM, and Rivian, amount to a castle made of electric vehicles. However, it is natural for some experts to wonder how sustainable the current growth drivers really are. Morgan Stanley analyst Jonas raised concerns about the bullish stock movement connected to AI. We get why Tesla is being brought up in the context of AI, but a re-rating on this theme seems like non-disprovable BS to us. Jonas added, "We continue to believe that autonomous driving and generative AI are distinct technology domains. While traders can daydream about AI, we'd be ready for a rude awakening from a passing automobile." Dan Levy, an analyst at Barclays, agrees with Jonas that the hype around Tesla's AI capabilities has already been factored into the stock price. At the same month, Levy lowered Tesla's rating from overweight to neutral. Although it comes as a surprise that the stock has joined the surge, Levy advises investors to take a step back for now. As a result of this, what does Tesla have going for him, and what doesn't? Even though nobody can forecast the future, optimistic assumptions are helping to keep Tesla stock in the spotlight. One reason for its growing popularity is the effect of cheaper prices. Musk's decision to refocus his attention back to Tesla from Twitter is another factor. CEO and president of Gerber Kawasaki Incorporated Ross Gerber recently spoke with Yahoo Finance. In reference to the recent rise in Tesla share prices, he added, "We have just seen full-fledged how Elon's focus makes such a huge difference in the results." Tesla's continued success in the face of intense competition can be attributed in no small part to Musk's singular focus on the company. As a result of last year's lowering price and its rising earnings, Tesla's market capitalization has plummeted. What many people don't know is that Tesla is divided into three distinct markets. Even if many investors don't realize this just yet, they will eventually come to understand. The company's energy generating and storage sector, as well as its services and other division, are both expanding significantly. However, Tesla stock's volatility might be attributed in part to the company's inherent risks. Musk's acquisition of Twitter is just one example. Some industry watchers worry that Musk will have his hands full between Tesla and SpaceX, a space exploration company. Additionally, vehicle delivery may fall short of projections. The Chinese market is Tesla's largest, and the company has reported record deliveries in the second quarter and strong prospects for sales there. Any progress made could be lost if that goal isn't met. A recession is still a distinct possibility. Although not unique to Tesla, this threat has the potential to significantly reduce demand for the company's more expensive automobiles. Similarly, as more governments call for the elimination of gas-powered vehicles, the market for electric vehicles will further heat up. Every automaker has a financial incentive to build electric cars now, but despite this, Tesla is doing well and is still a market leader when it comes to electric vehicles. Stay tuned by subscribing.